where we break down financial trends, investments, and the future of money. Today, we're diving into one of Bitcoin's most powerful value drivers: scarcity. There are only 21 million Bitcoins that will ever exist. Meanwhile, the supply of US dollars is expanding rapidly. Let's break down what this means for your financial future and why Bitcoin could be the ultimate store of value.
Because Bitcoin is locked in to the scarcity, and that locking in process is only due to its decentralization, right? So a decentralization plus the design of Bitcoin, which features this 21 million supply cap, it is empirically causing prices to go down forever.
Bitcoin's scarcity is hard-coded into its protocol. There will only ever be 21 million coins, no more, no less. This limit is enforced by the network's code, and changing it would require consensus from the entire Bitcoin community. An incredibly unlikely event. Today, over 19.6 million Bitcoin have already been mined, meaning less than 1.4 million remain to be created. New coins enter circulation through mining rewards, and those rewards are halved every 4 years in an event called the halving. The most recent halving occurred in 2024, reducing the mining reward to 3.125 BTC per block. This decreasing supply flow creates upward pressure on price if demand remains steady or increases. Contrast Bitcoin's fixed supply with the US dollar. The Federal Reserve controls the money supply, and recent data shows it's expanding at roughly 7% per year, and potentially much faster when you factor in unreported spending and debt growth. When dollars are printed at this pace, purchasing power declines. This is why everything from groceries to rent feels more expensive over time. While your dollars lose value, Bitcoin's fixed supply allows it to act as a hedge against inflation.
That this happens, it comes down to, of course, Bitcoin scarcity, that there are only 21 million coins to ever exist. And the introduction of new coins now is less than 1% a year, whereas the dollar is growing at least 7% a year. That's just the data that we can see. It's likely growing much.
Bitcoin has a fixed supply of 21 million coins. No one can print more. No government, no bank, not even Bitcoin's creator, Satoshi Nakamoto. But why was Bitcoin designed this way? And how does this scarcity impact Bitcoin's value? Bitcoin was created as an alternative to traditional money. Governments can print unlimited money, which leads to inflation and a loss of purchasing power. Bitcoin is different. Its supply is capped at 21 million. This makes Bitcoin scarce, like gold. A Satoshi Nakamoto designed Bitcoin's supply curve to mimic gold mining. And the goal was to create a predictable, controlled release of new Bitcoin. This prevents inflation and makes Bitcoin a trustworthy store of value. Can someone change Bitcoin's limit? No. Bitcoin's 21 million cap is hard-coded into its software. It is enforced by a global network of computers, nodes, running the Bitcoin protocol. A Bitcoin doesn't release all 21 million coins at once. Instead, new Bitcoin enters circulation slowly over time. Every 4 years, the amount of new Bitcoin created is cut in half. The Bitcoin network will keep running because users will still pay miners to process transactions. A Bitcoin scarcity will be fully realized. Think about gold. It's valuable because it's rare and hard to mine. Bitcoin is even big companies like Tesla and MicroStrategy are buying Bitcoin. Countries like El Salvador have made Bitcoin legal tender. Better.
Bitcoin is empowering, right? It's not just an alternative form of money or a new asset class. That it can really empower people if they simply recognize the dichotomy between Bitcoin and the credit system.
Imagine a world where you don't need to ask for permission to own your wealth, move your money, or participate in the economy. A world where financial sovereignty isn't a privilege, it's a right. This isn't science fiction. This is Bitcoin. Today, we're not just going to talk about Bitcoin as another form of money or just another investment. No, we're going deeper. Bitcoin is empowerment. It's not simply an asset class, it's a complete economic shift. A new base layer for human cooperation that challenges the global economy runs on credit. Debt issuance isn't just common. It's the engine of modern finance. Governments borrow, corporations borrow, consumers borrow. Even banks themselves operate on borrowed reserves. Money isn't created by value, it's created by obligation. The result? A world constantly leveraged against tomorrow. Growth is no longer organic, it's synthetic, propped up by ever-expanding debt piles and artificially suppressed interest. But here's the thing. This system is inherently fragile. Because if credit tightens or confidence cracks, everything grinds to a halt. We saw this in 2008. We saw it again in 2020. Every few years, central banks are forced to intervene just to keep the game going. What happens when your money can be printed at will and your access to it is permissioned? Control. Rates foundations of the global credit system. Bitcoin isn't built on trust. It's built on truth, mathematically enforced by code and secured by an army of global nodes and miners who don't answer to any government or central bank. Bitcoin doesn't issue debt. It doesn't need permission. It's not created through obligation, it's created through energy and proof of work. It's money, yes, but it's also final settlement. It's an economic base layer that doesn't require intermediaries. This is huge. In a credit-based system, your ability to access value is contingent on someone else's balance sheet. In the Bitcoin system, you are the balance sheet. You hold your keys, and no one can debase or censor them. Bitcoin is disintermediation. It cuts out the middleman, the rent seekers, the gatekeepers, the manipulators of supply and demand. But more than that, Bitcoin is inclusive. No matter your nationality, income, or history, if you have an internet connection, you can participate in the Bitcoin economy. You don't need a bank. You don't need an ID. You don't even need trust-only math. Imagine a refugee who fled war with nothing but a phone. They can't carry gold. They can't access their bank. But with 12 words, a seed phrase, they can recover their entire net worth from anywhere in the world. That's not just innovation. That's empowerment. Or think of an entrepreneur in Nigeria. Their local currency is inflating by the day. International payments are restricted. But with Bitcoin, they can transact globally, save in a currency that holds its value, and escape the limitations of their geography. This is the quiet revolution that's happening right now. Bitcoin empowers the individual in a way the credit system never could and never intended to. But the real breakthrough is this. Bitcoin isn't just a better currency, it's a new economic operating system. Instead of debt-fueled growth, it promotes value-based growth. You can't inflate your way out of mistakes. You have to build real value, earn real trust, and operate with real discipline. It's a system where incentives are aligned with truth, not illusion. In this world, capital isn't allocated by politics or credit ratings, it's allocated by signal, where the strongest projects rise, not the most over-leveraged ones. And over time, Bitcoin could become a new foundation for global settlement, interconnected commerce, and even national reserves. This isn't just theory anymore. Countries are adopting it. Institutions are adding it to their balance sheets. The infrastructure is maturing. The Lindy effect is real. We're witnessing the birth of a new base layer, not just for money, but for civilization. So let's bring it home. Bitcoin is not just an investment. It's not just digital gold. It's not even just an alternative to fiat. Bitcoin is empowerment. It's an opt-out from a broken system and an opt-in to a future where freedom, truth, and self-sovereignty are built into the protocol. It shifts power away from those who issue credit and toward those who produce value. It creates a world where your economic agency is no longer determined by your geography, your privilege, or your political environment, but by your willingness to take ownership. Bitcoin is not a protest. Scarcity drives value. Gold's limited supply has made it a reliable store of wealth for centuries, and Bitcoin operates on similar principles but with added advantages. Bitcoin is easier to store, faster to move, and more transparent. Even major institutions are beginning to understand this. Companies like MicroStrategy and Tesla have invested billions in Bitcoin as a hedge against inflation. As the US dollar's supply keeps rising, assets like Bitcoin are becoming increasingly attractive. So, what does this mean for your portfolio? As global debt levels rise and central banks continue printing money, Bitcoin's scarcity is likely to become even more important. Fewer new coins are entering the market, yet demand is steadily increasing. This dynamic suggests significant long-term potential for Bitcoin's price. Of course, investing in Bitcoin carries risks. Volatility is high, and markets can shift rapidly. But if you're looking for an asset that thrives in inflationary environments, Bitcoin's scarcity advantage makes it a powerful tool for wealth preservation. If you found this analysis helpful, don't forget to like, subscribe, and hit the bell icon for more insights into Bitcoin, investing, and financial trends. Let me know your thoughts in the comments. Do you believe Bitcoin's scarcity will drive its value higher in the coming years? Thanks for watching, and I'll see you in the next video.